Now we're talking specifically diamonds, right? The production side thereof. And we're moving on to Anglo American because, of course, as I'm pretty sure you understand, Anglo American is pretty much the 90% shareholder in DeBeers, which you'd have to say created this fabulous sensation of diamonds in respect specifically of wedding jewelry and all of the other trappings. It's not something that was always the case. Basically, DeBeers, over a period of 100 years, has engineered it in that way. However, of course, Anglo American isn't only about DeBeers. It also has a significant platinum footprint. It has a significant iron ore footprint, both with respect to its holding in Kumba, as well as other iron ore producing assets, particularly in Brazil. So this one doesn't look quite as rosy. It's got a market cap of 275.5 billion rands. Used to be a bit more. Price to earnings ratio is down to 15. It's got a dividend yield of 5.6%, which is pretty high. Mia, what's your view of Anglo American?
Okay, so let's talk about the company as a whole first. If you think that commodity companies like Anglo will revert to the mean, this probably offers good value for you. Not paying much more than book value, and you're getting a whole lot of assets that aren't being able to, or it's not able for anyone to duplicate them in future. So that is probably the plus sides for the commodity companies. But when you carve out something like DeBeers, we know that DeBeers have actually mentioned now recently that they're looking at selling their Kimberley stake. It's a decreasing sort of mining operation at the moment. We know they sold Namaqualand to Transex a while ago. So you know those mines go out of lifetime in some sort of time. But most of their mines, especially the ones in Botswana, which are the best diamond mines in the world, are still long life mines, and they're still getting a lot of diamonds from there and very high carats. So that's the driver for the De Beers factor. De Beers is roughly about 25% of the revenue and the sales of Anglo, if we want to look at it that way. And we've seen an increase in the demand for diamonds over the last year or so. Not a massive increase, but a marginal increase. The price has stayed roughly the same. But if you consider the company as a whole, you need to be a brave investor, and you shouldn't have any other better opportunities out there to buy resources at this time.
Yeah. Look, the 5-year chart, we might as well put it up because that will encapsulate the story Mia's talking about. So a rather difficult period, dragging itself lower and rightwards and to the side, notwithstanding the fact that Mark Cutifani, the CEO, is highly regarded. Yes. People are worried that the iron ore business is not going great and that the platinum operations, as they switch to the open cast type operations, still going to give them lots of legacy assets. But just talking diamonds a bit for the minute, I know that Johan Rupert is often on record saying that if they could produce more jewelry, they'd sell more jewelry. If there was a greater supply of stones, if their whole cutting system, although I suppose there's a bit of a balance they want to strike. They don't want to flood the market at any given stage. But De Beers does appear to have, as you say, the solid assets. It's got Venetia, it's got Jwaneng, it's got Orapa, all the fabulous mines along that belt, along the Botswana border. You're going to continue to see solid contribution from that part of the business. If Anglo American was only a diamond business, it would probably be trading at a higher multiple than it would for the aggregate group, right?
I agree, because it's a quality asset, and it has performed well over time. So I agree with you. It's a commodity price that hasn't been as badly hit as most of the others. Also, as we know, the price is obviously determined by the supply to the market, and there aren't that big supply of diamonds to the market.
That's an interesting wrinkle. So as part of the consolidation deal with the Botswana government, they moved the diamond sites where the guys actually buy the boxes of diamonds from London to Gaborone.
That's right.
Have you any idea of how that's going? I mean, do the diamonders like flying into Botswana like they used to like flying into London?
Well, it seems when I looked at the numbers earlier in this year, which reported to the end of last year, that they did have an increase, quite a larger increase on the rough diamonds, on the sale of rough diamonds. So it seems to be working at this moment for them.
Well, good for them. Must have been good for the hotel business in Gaborone. Okay, good. So as far as this one is concerned, what I think you're alluding to is that it's a tough call on the commodity cycle. It's trading below 200 Rand a share. I know the value buyers kind of keep saying it can't possibly go any lower. Hot or not for you?
Well, I'll go hot because I think that commodity prices have stabilized to an extent. I think there are better investments in the market, but due to the diamond factor here that we are looking at, I'll go hot on Anglo today.
Right. Well, I'm going to go against what you said in that respect, because I'm more of the view that the commodity market's still a little bit broken, a little bit false rallies, that kind of thing, and that the negative year-on-year comparisons and all of that sort of stuff is going to still weigh on them. So not hot for me on Anglo.